Yo people, I hope everyone's good. I'm just gonna go over a basic video. I'm just gonna try and clear things up for people so they can like, have some sort of like bias or direction in the market and just try and like navigate where price is going and just to learn. So I'm gonna go over like the most important thing in my opinion, structure in the market. And the only two structural patterns you will see in the market will be bullish, which means the buyers are in control, prices going up, or you go in bearish, which means that sellers are in control and prices heading down. So when you're in a bullish market, what you're going to see is you're going to see lows, highs, higher lows, higher high. Oh shit. Higher low, higher high. That's what you're going to see. Oh yeah, I've got something. So you get a low, then you get a high, and then you get a higher low. This is a higher low because simply as it is, it's higher than that low. And then what do we get here? This structural high has just been broken. So what's that telling me is that we're going to go ahead and see the same thing. We've created a higher high here. So then I'm expecting a higher low, which is what happens. Higher low. And then again, we break structure. There we go. Break structure. So again, what am I going to think? I'm just going to follow the pattern. Like this is going on. There's no need to change it. Just follow the pattern. And then another higher low, and then creates a higher high. And then until it changes, then we'd look for sells. And in a selling opportunity, when the market is heading down, what you will see is literally the same thing, just flipped. So you get a high, then a low, then a lower high, then a lower low. Shit, I've done it again. Then a lower high. Wow. And then a lower low. That's actually what happens in a bearish market, and that's what you'd only want to be selling in a bearish market. A basic anyway. If you get more advanced, then there are ways that you can catch buyers like within here. But here you get a high, you get a low, get a lower high, and then we get a lower low because we've broke this structure here. Now we broke this, I know that the sellers are in control. Supply. Oh yeah, I wrote down here as well. Supply and demand in the markets are just sellers and buyers. Supply simply being people selling and demand being people buying. So this is demand and then supply kicks in. Demand, supply. So demand is in control here. This is supply. This is demand buying up. Demand isn't strong enough to take out this, so sellers are in control. And we know that, so we'd be looking for sell opportunities at the lower high. And if you find this confusing, just watch it a couple of times and like it will just end up making sense. So this is the only structural patterns you will get in the market. And there is one other thing that happens, and this is a range in market. And this is simply when buyers and sellers, they're in a competition, like neither are winning. It's not going up, it's not breaking the structural low or the structural high. It's just people trapped in the market buying and selling together, but no one's strong enough to take each other out, so they just keep doing this and then eventually break to this side or break to that side, whatever happens, and then you go from there. But yeah, so they're the only three situations that happen in the market. If you find it a bit confusing, just go over it a couple of times and it should make sense after a while.